The Dow is down 10 of the last 13 days, but right now it's about to break that. Right now we're up 94 points, but we've lost more than 100 points off the highs of the session. A lot of this has to do with fears about trade disputes that seem to be ramping up, but our next guest says it's all going to blow over. Some of the hardest hit stocks are making the best investments right now. Steve Dudash is president of IHT Wealth Management. Okay, Steve, make your case. You buy the beaten up guys right now?
We're always buying the beaten up stuff. 2 years ago, we were buying energy when everyone said stay away from that. It was killing it. A year ago, we were like, buy financials. That's outperformed the market. Yeah, listen, we all know trade wars are bad. We don't have to debate that. But the reality is, if you take the politics out of this, the world leaders aren't dumb. They know this. And the people around them aren't dumb, too. This is just posturing right now for negotiating tools. It's going to blow over. They're going to pull back on it. But you got some sectors, like we're going to talk about, that are just getting overly hammered for no reason other than they think that no one's going to buy some phones anymore. No one's going to buy technology anymore. It's just not realistic, and it's just emotional. And that's what we're always looking for when we're trying to buy into good pricing points.
Well, then they're going to have I could have had a V8 moment, and they'll knock their heads and say, why didn't I buy right now? Which will be in the rearview mirror. So let's say you're advising them to wake up and smell the V8 and buy right now. Which sectors do you feel have been hammered down so much that they are great deals right now?
Semiconductor sector. The whole sector is beat up right now. You've got companies like Micron that are trading at 4.5 times future earnings.
Micron's up 88% year over year. What are you talking about?
But it's down 17 or whatever it is in the last month or two ever since all these fears have been going on, and people are pricing it as if it's going to go out of business. There's no way. I mean, it's impossible. What's more realistic? That potato chips, that are most of those companies are at 14, 15% future earnings, are going to grow faster than Micron? Or Applied Materials that have grown 30% service earnings over the last year of growth? That area is going to pull back. I mean, are you going to buy a phone next year with less technology, less support, less memory? Or are you going to pay a little bit more, which is, if the trade war goes through, more realistic? You're just going to pay more for the same thing. The biggest loser that probably is going to happen here in the next year is the consumer is going to take the brunt of this to some degree. But technology is going to keep going. So buy into what's cheap now. And right now, the thing that's gotten hit the hardest is semiconductors.
Right, and you had Applied Materials and Lam Research in there. What are those PEs?
Yeah.
You know, PE, by the way, price to earnings ratio, for people don't know. That gives you a sense of whether a stock is overpriced or fairly priced.
Right. So both of them are like in the 8 to 9 range of the future earnings. So what we think is going to happen in the future. Meanwhile, you got companies like Pepsi Pepsi's at 17. General Mills is at 14, 15. Which one's more likely to grow? It's not realistic right now. And that's when we're consistently going on shows like yours over the years. We're always looking for the things that the logic doesn't make any sense anymore. And we want to take advantage of those and take advantage strategically, again, like with Micron or Applied specifically, that have shown the ability to continue to grow even in down cycles. Chips might get hit a little bit harder in the next couple of months as the trade talk comes on. There's no doubt about it. It could absolutely happen. But in the next 5 years, you think technology is going to be bigger or smaller? Do you think everything's going to connect more or less?
Obviously, smart homes and personal electric, you know, the Alexa and all of this stuff that everybody's using. We've got about 15 seconds left, Steve. We've lost now more than 100 points off the Dow. Anything to worry about when you see this kind of loss at the last couple of seconds?
I mean, like you were talking about before, it looks like we're going to hit our support levels. I'm not overly concerned about the last few minute trading changes. That's usually, at this point, the quant program's just cleaning up the books at the end of the day. So this isn't, don't read too much into the last 100 points.
All right, I won't, because you said not to.